the key to investing in this ecosystem is diversification.
Yeah,
right?
for sure.
Don't put all your eggs in one basket. You want to have a big chunk in Bitcoin, fine. But if you think about it, if Bitcoin is as successful as we all think it will be, it won't be the best performing. Full stop.
For sure.
Right? Just because
it's going to get to
the
that
largest.
point.
It's just the law of large numbers, right? You're not going to go from 400 billion today. Even if you go to 4 trillion, that's a 10 bagger. Okay.
Mm-hmm.
Ethereum at, I don't know what Ethereum is, 180, maybe 200 billion. If it gets to 4 trillion, that's twice as much. Almost 200. So that's almost twice as much. But if Avalanche actually becomes that intermediate layer, or becomes a bridge to connect, Ethereum and I don't know, but it could be, maybe a 50x. And so I think you want to diversify your portfolio, not to if you want to speculate on the dog coins, be my guest. I'm not going to do it with you. People want to do that. To me, that's literally gambling. Just literally gambling. It's like buying AMC or GameStop, and you want to gamble that there's a greater fool, knock yourself out.
Mark Yusko is an American investor and hedge fund manager. He is the founder, chief investment officer, and managing director of Morgan Creek Capital Management, an investment management firm that advises pension funds, endowments, and wealthy individuals. Morgan Creek Capital CIO Mark Yusko says Avalanche has the potential to go on a massive surge and outperform the rest of the crypto market in the next cycle. In a new interview with Paul Barron, the crypto veteran says the smart contract platform could skyrocket 50x in the next bull market cycle as long as Bitcoin and the overall digital asset market succeed. Avalanche is changing hands at $18.02 at time of writing, a more than 68% increase from where it was at the start of the year. With a market cap of $5.7 billion, Avalanche is the 17th largest crypto asset. Yusko also makes an analogy between the potential future infrastructure of crypto and the Internet's infrastructure, such as the Internet Protocol, Transmission Control Protocol, File Transfer Protocol, Hypertext Transfer Protocol, and World Wide Web. The comparison is one reason he thinks these blockchain projects will survive the volatile markets and have an important utility in the crypto space. Yusko said in his interview Avalanche could rally by 50 times in the next bull cycle, provided that Bitcoin and major coins remain successful. According to Yusko, the key to investing in this ecosystem is diversification. He believes that although Bitcoin may be the largest cryptocurrency by market cap, it won't necessarily be the best performing investment. This is due to the law of large numbers. The larger something is, the harder it is to achieve large gains on the same scale.
If the Fed follows, then that'll be good. Because the thing that people forget, one Bitcoin is one Bitcoin. We don't price it in Bitcoin, we price it in dollars. Mm-hmm. So the reason that Bitcoin goes up over time isn't because Bitcoin gets better, it's just a Bitcoin. It's because the dollar's getting worse. And so when we're quantitative tightening, the dollar got strong, which meant the price of Bitcoin went down. Now, as the dollar's getting weak, and the dollar's been in free fall, right, since October. I mean, absolute free fall. DXY just getting crucified.
Sure, yeah.
And so if the Fed follows through, then I see a big tailwind for Bitcoin, gold, and all stores of value. I used to say form your base, Bitcoin, Avalanche, Solana, Ethereum. I might modify that. I might ditch Solana. I think it was a Sam coin or scam coin a little bit. I think there's a lot of good development on Solana. I think there's a lot of good projects on Solana, but unfortunately, I think that was one of the manipulated. It's not as bad as Serum or FTT or Oxy or a couple of the others, but so I'd probably take Solana out of there, and I'd probably swap in Polkadot and Cosmos. So that doesn't make a very good mnemonic, but I'd probably pull Solana out of that 6 and keep the other 5. Because the reason I like those 5 is I'm not sure whether right now we have 5 protocols that govern the internet. So there's there's IP at the bottom, Internet Protocol, and there's TCP/IP, then there's FTP, SMTP, HTTP, www. All right. I can argue that on top of Web3 is Bitcoin is the base layer, Filecoin is FTP, Ethereum is www dot, and Cosmos, Polkadot, Avalanche are SMTP, HTTP. I don't know which ones. So we end up with 5 or 6. Or I could make a case, kind of, not as well as the maxis, that it's Bitcoin always, Lightning, L3, L4 that haven't been developed yet, and who knows on top, and that there is no other L1s. Or I could make the case that Bitcoin, Ethereum, Avalanche, Polkadot, Cosmos, and then we have bridges and interconnectivity, interoperability. I'm not smart enough.
Bitcoin prices are currently trading over 36% higher for the month of Jan, buoyed by renewed optimism surrounding the speculative asset. As fears of FTX contagion and higher interest rates subside, the sharp rebound in Bitcoin and US dollar drove prices higher before stabilizing above $22,000. Although recession fears and monetary policy remain at the forefront of risk sentiment, technical levels have assisted in driving the recovery. However, if bears exert pressure and force prices lower, an increase in selling pressure below $21,500 could bring the December 2017 high back into play at $19,666. There are those who argue that Bitcoin is a bubble and that ultimately cryptocurrencies are worthless. If we assume there is a future for blockchains, which are the online ledgers that enable cryptocurrencies, the key question is when Bitcoin will reach the accumulation phase that typically ends a bear phase in any market. With Bitcoin having no real catalyst in the short term and plenty of potential downside catalysts, there are plenty of risks here from the NAV side as well. Worst of all, institutions want nothing to do with Bitcoin or crypto broadly, at least until regulation comes, and arguably most people feel the same way after the collapse of FTX and other large crypto platforms.
The discount in GBTC doesn't look like it's going to close anytime soon. Mm-hmm. And so what you're going to get in GBTC is the movement in Bitcoin. And we can all have an estimate of where we think Bitcoin's going. You do the math. Coinbase was different. Coinbase had been pummeled from loss selling and a whole bunch of other, people throwing the babies out with the bathwater, and people spreading FUD, fear, uncertainty, and doubt about their reserves and comparing them to, a speculative company like Celsius, where there was a token, or FTX, where there was a token. There's nothing similar about Coinbase and those other entities in that regard. Yes, they're an exchange. Yes, it's not your keys, not your coins, but I believe CeFi has a role for people who don't want to deal with the hardest elements of the new age of decentralized finance. But Bitcoin or Coinbase got super undervalued. Relative to their earning power, relative to the cash on their balance sheet. It was basically selling at maybe sub 1 times revenues. Crazy net cash. So I don't. And look, what's Coinbase up year to date? 58%, something like that.
It seems like there is more pain on the way with a recession on the cards, unprecedented job layoffs, and weak retail data coming out of the U.S. It doesn't point to the kind of optimism that tends to move markets higher. It would therefore make sense to brace yourself for another plunge in the price of Bitcoin and the rest of the crypto market. With that being said, as the market has realized the lack of risk in this regard, the discount to NAV has closed drastically. The discount dropped from over 48% all the way down to 36% in the past month, to levels before any of these fears surfaced. One of the Winklevoss twins has begun advocating for Barry Silbert to be disposed of as CEO of DCG, and generally the FUD is ramping up again. This all points to the fears of bankruptcy, uncertainty regarding GBTC, and all the fears we had in late November and December will return in the coming weeks, likely causing the discount to NAV to increase once again. Grayscale Ether Trust DCG going bankrupt could be positive for investors if they decide to simply close the Grayscale funds. However, this situation remains unlikely. Inflation is still quite high, interest rates continue going up and are likely to be sustained throughout 2023. There is still plenty of uncertainty regarding a potential recession and the consequences of it on the crypto market. The halvening is quite a bit away.
If Barry and Grayscale are forced to liquidate GBTC, which, there's a bunch of shareholders that are kind of coming together to try to force that issue, right? Closed-end funds can get taken over by their shareholders and can be forced to liquidate. Now, The bar is a little higher with GBTC, as I understand it, with the structure. Like a lot of closed-end funds, you only need about 10, 11% of shareholders to get a special vote. I think the number here is higher than that, maybe even as high as 50. I don't know that number exactly. But even so, if, and that's capital I, capital F, if GBTC Trust was forced to close and we basically sold 10 billion, now probably closer to 11 or 12 billion dollars of BTC, that's about 10% of available circulating supply, right? Not total supply, but remember, 65, 70% of Bitcoin hasn't moved in 3 years, is not going to move. So the free float is what we have to talk about. And GBTC owns, as I understand it, about 10% of the free float. Now, if that were liquidated, everyone says, "Oh, it'd be horrible and be straight down." Well, remember, for every seller, there's a buyer, and I think there's a lot of money waiting to get back in, and so I think it would be bad short term, but I don't think it'd be a disaster, and I think we could handle it. Now, I also think Barry has said you can take GBTC when you pry it from my cold, dead hands. Okay, that's pretty strong. So I don't think it's going to get liquidated. So if it doesn't get liquidated, I think we're in pretty good shape.
Investors are sitting on the sidelines of the crypto market after a rough 2022 dragged down by challenging macro conditions as well as the destruction caused by the demise of Terra and the bankruptcies of Three Arrows Capital, Celsius, Voyager, and FTX. Many retail crypto investors have been holding on throughout last year's harsh crypto winter. Younger age groups seem to be the most optimistic about crypto's long-term potential. But will the conviction to hold such a volatile asset class continue this year? Cryptocurrency investments tend to be a bit more complicated than traditional means, given their volatile nature. The asset class, which is still in its infancy, has faced many obstacles. Given the newness of crypto, most enthusiasts urge newcomers to learn the basics and invest in the long run rather than gamble on high-risk altcoins. Of course, history does not repeat itself exactly. It may be this is the first time that retail investors have outsmarted the large institutions, and that the only way is now up. What are your thoughts about ongoing crypto market highs and lows? Do you expect these assets to perform beyond investors' expectations? Let us know in the comments section below. If you like our content, give this video a big thumbs up and do subscribe to our channel.